So welcome back, ladies and gentlemen. In today's video I want to talk about the failed QM pattern. Now you remember I did a video on the QM, the Quasimodo pattern. So if it fails to hold, now we'll consider it as a failed QM pattern so long as it is valid and in line with the structure, with the flow of structure. Now if you didn't watch the video regarding the QM pattern, at least the QML, the Quasimodo, you have to consider watching it before you understand this one better, because you must have a knowledge of whatever the QM pattern entails. Now for just a glance of a second, the Quasimodo pattern, the normal one, looks something like this, whereby we have our high, low, higher, high, lower, low. Then you wait for the market to test this shoulder for you to be able to take a sells from. And it looks like the normal head and shoulders pattern, but it's not the same because of the neckline and everything. Just consider watching the video in the QM pattern. I might link it with this one so that you can be able to see the difference. Now, the normal QM pattern begins like this. We have the high, we have the low, higher high, lower low. So you're waiting for the market to retest this shoulder for you to take a sells from. But at some point, the market will invalidate rather. Whenever it is invalidated, then now it might qualify to be a failed QM pattern, whereby you wait for the market to retest this one so long as there was a demand level that was created whenever the market invalidated it. Basically, it is not a mark for this demand level to be used. You can also use this one, the one that was supply level but it was ignored, depending on the framework. And I'll teach you on how to go through about it, because at some point whenever I see a clean break with a huge candle, now I might consider using the supply level that was ignored, because the institutions now want to mitigate the order secretly before you realizing. So the normal Quasimodo pattern begins like this: the high, the low, the high high, the lower low. The lower low should be lower than this one, at least to qualify it to be a normal QM pattern. So you wait for the market to retest this shoulder for you to take sell entries from. But what happened instead? It did not hold, right? So whenever it doesn't hold and it violates it, whenever it retests, at least you should be considering to buy now, because it's a failed QM pattern. You can potentially call it as QM manipulation also. The failed QM pattern can also be considered as QM manipulation or QM manipulation. So you can choose to call it failed QM pattern or QM manipulation. Basically, it begins like the normal QM pattern: high, low, higher high, lower low. At least this lower low should be lower than this one. This in terms of swing points, and I told you. But whenever the market reaches this shoulder, you should be anticipating to sell there. Whenever there is a supply level coupled with this shoulder. But what happens if it invalidates it? It violates it instead. You wait for the return to the demand that has been created or the supply that has been ignored. It can be of use in future and you'll see it. So you wait at least for the market to retest that zone. At least it should be in line with this shoulder also. They must be in line. So whenever the market retests, at least you should be taking a buys from. So this is the case for the buys. Now, another scenario is this. We have the low, high, lower low, high, high. So whenever it forms this high, high, you're anticipating to buy whenever the market retests this shoulder. When it has a clear demand level, you buy. But what happens when it violates it? At least you wait for the return to this zone. At least it should be in line with this shoulder. You take your sell from. So it's a failed QM pattern to tag you to the sell side of it. This one is a failed QM pattern to tag you to the buy side of it. So structure is very, very key whenever trying to gauge with these types of patterns. At least go through this section alone, before you dive into the markets. At least trying to gauge how the failed QM pattern or the QM manipulation looks like. So basically it begins like the normal, and I'm repeating at least for you to get the drift very carefully. it begins like the normal Quasimodo pattern, but it is violated, it is invalidated, you know, whereby you're anticipating to sell at this particular point, but the market invalidated. Now you wait to buy at this particular level. So the stop loss, at least you should enter. The stop loss should be below the demand level, at least to accommodate the volatility spikes. If the market gave you a clean break whereby there is no clear demand level, you can consider the supply level that was violated. Now at least the stop loss should be below it. For the sales of it, sell side of it, the stop loss also, whenever the market gives you a clear supply level, this particular point, you consider placing a stop loss above, slightly above the supply level that has been created. If the market broke this particular level with a clean candle, you can consider the demand level that was invalidated this particular point, because you're in real sense anticipating the market to reverse from it. So you put a stop loss slightly above the demand level that was created. Now consider this example. Initially we had our high, low, higher high, lower low. You are anticipating at least the market to sell whenever it reaches or it reaches this shoulder, at least the normal Quasimodo pattern. But what happened instead? The market failed to retest it, right? So whenever the market failed to retest, at least it invalidated it, at least there was a break of this structure, of this point. Just be patient. At least the structure may be signal that there are potential bulls. Also, you've been seeing the market has been pushing to the upside for long. So it has been signal that indeed the bulls are very, very dominant. So you just wait patiently, at least the market now to give you a retest of the demand level. Stop loss will be below the demand level now. So this is the failed QM pattern, because you're waiting for the market to sell from this particular level, but it invalidated it, it violated it. So you wait patiently, don't chase it, don't force sales. The market has now shifted the focus to potential buys. Just wait for the market to retest. At least it must be almost in the same line you buy. So it began like this one. It began like high, low, higher high, lower low. It was violated at this particular level. We're expecting the sales, but it was violated. So wait for the market to retest this level for you to take your buys, at least a significant demand level. Now the market pushed, at least you could have placed a stop loss but at that particular level whenever the market dipped into it. So you could have placed a stop loss below this demand level somewhere here to accommodate this volatility spike. The first target could be this high and also this higher high, maybe. So you could have held your positions until the market could have taken profit. And you see, it was a sniper, you know, it was very, very good sniper. Now consider this one. The market created a low, high, lower low, then higher high, after taking out the liquidity that was residing above this short-term high. So whenever the market took out the liquidity that was residing above this short-term high and began breaking the significant or invalidating the demand levels, at least you should be shifting your focus to the sell side of it. So the market now shifted the focus whenever it has been breaking the short-term lows to the sell side of it, you know. So it created another QM manipulation of the failed QM pattern. We had our low, high, lower low, high, high. So we had buyers who were anticipating at least to buy whenever the market reaches this shoulder, this particular point. But what happened? The market now, this is the case I was talking about. The market gave us a clean break. So whenever the market gives a clean break, now you consider this demand level that was ignored. So you could have entered your sales at this particular level whenever the market tapped on it, the opening of it, or the lowest of it is the demand level. Now just to get the scenario, just to get the difference and back test. So this is the low of the portion of the candle of the demand, this is the high. So you just get tagged whenever the market dips into it. It was a sniper also. Stop loss just above slightly to accommodate volatility spikes. Your target objective, you can target this low now, this low, at least to take your profits from. Also this short-term loss whenever the market is selling, and it was a sniper. You know, also these lows you can, because now the market shifted focus to the sell side of it, these lows also. So basically it works like magic, you know, it works like magic. So basically when you see a clean break whereby the market has not given you a clear supply level at this particular point, you now shift your focus to this demand level whereby it was ignored. You're anticipating buys from it. So this was the failed one for the sell scenario, low, high, lower, low. Then we had our higher high, then the market showed a willingness now to continue dropping. So this Quasimodo pattern that you're anticipating buys failed. Now it is clear manipulation whereby you sold from this particular point whenever the pattern did unfold. So this pattern works in any asset class. You know, you can either trade commodities with it, the currencies, indices, the Nasdaq and everything. So it's upon you at least to try to backtest and gauge properly where the pattern works best for you. So I'll talk about this one. I could have used this one, is my hidden base. I'll talk about it in the series of the hidden base. We have this series of, we call it the double marubos or the kissing candles, whereby we have the bullish candles and we have a week at the opposite ends. We have this week and this week. So you enter based on the midpoint of it. Your stop loss should be below this particular point. I'll touch on it when we reach the section of the hidden base. So guys, ladies and gentlemen, at least try to backtest whereby the pattern works, you know, and it works like magic and it can pay you. So I like this pattern based on gold. Backtest, backtest, backtest. See you soon. It has been an enticing one and a thrilling one.